All right, what's up, guys? This is David here from binaryoptionsdaily.com. So today I just wanted to go over with you a new strategy. Many of you have actually used moving averages before, but this particular strategy I like to call the exponential moving average rainbow. It's a little bit of a long name, but could produce some amazing results. So let's see how you like it after I explain it a little bit. So let's go ahead and get started. The first thing we need to do is add 3 exponential moving averages. So I am in MetaTrader right now, and the way that we add this is by going to Insert, Indicators, Trend, and clicking on Moving Average. And of course, if you're in a different charting software, you are more than welcome to add these as well. And it should be hopefully all the same options and everything that you're allowed to choose from. But we're going to go ahead and add the first one. And our first one is going to be a 6-period exponential moving average applied to the close, and I'm going to keep this color aqua, and actually I'm going to make this line a little bit smaller than it was and click OK. Now we need to add 2 more, so we're going to go back to the indicators, trend, moving average, and the next one we're going to do is going to be a 14-period moving average, and I'm going to be using a magenta line for this one. And again, these are all exponential and applied to close. So I'm going to click OK. And we need to add 1 more. So we're going to go back to indicators, trend, moving average. And this one is going to be a 26-period moving average, exponential applied to close. And I'm going to choose yellow for this color and make this one just a little bit bigger. And go ahead and click OK. Excellent. So now let me explain a little bit about why I'm using these moving averages. With these moving averages, and especially going with the name rainbow, when I see a rainbow, you can kind of think of the rainbow as going to be upside down, or kind of the correct direction as you would regularly think a rainbow would be. So when the rainbow is upside down, I'm thinking of it being a upward movement in the market. So you kind of think of these as trend lines as well. So our 26-period moving average is essentially what I believe to be our static line. So when we've got the 26 right here, and we've got the 2 moving averages above our 26-period moving average, with the 6-period being on top of the 14, I believe we're in an upward trend. And as you can see right here, as soon as they both crossed the 26-period moving average, what I'm looking for to be able to take an entry with binary options, or I'm waiting for a price to retrace back down, also known as a pullback, to around the 14-period moving average. So I'm going to go ahead and add an arrow right here just so you can see what I'm talking about. Make that a little bit lower. And price usually does come a little bit lower than that 14-period moving average. However, as you'll notice when you are trading live, occasionally it's not going to be as far as you think it, or actually, well, it'll come down pretty far, but it's always seems like when you're going back and looking at things after the fact that it's happened, the lines change a little bit. So you just need to be aware of that, and that's why I really say the 14-period moving average instead of wanting to take it at the 26-period moving average. So although it might come down a little bit lower than this, the lines do move, so you just need to be aware of that when you're in live trading. So the next entry that we'd have is going to be around here, if we were taking it at the 14-period moving average. And our next one, of course, is going to be about here. And then we got 1 more right there. And you could also take this one right here. And essentially, with these moving averages, what we're looking for is just to try to stay with the trend. That's where a lot of traders get into real trouble, is they're trying to play reversals against the trend. And if you keep playing against the trend, it's gonna end up biting you pretty hard. So what we try to do is stick with the trend. We're waiting for those pullbacks, because when you pull back, when you're able to get in these pullbacks with the trend, that's when you've got the best opportunity to take some really, really good trades and also make some good money. So as we continue to move forward a little bit, I really wanted to show you what I mean about a reversal in the market. So we've got this pretty strong uptrend right here, and I'm on the 5-minute chart, just so you know, by the way. we had a pretty strong uptrend right here, and a lot of people were always asking, how do you know when a reversal has come? How do you know when the trend has really ended? So what I'm looking for with a reversal, I'm not actually looking to capture this huge reversal right here, because I'm not ever really sure when that's going to happen. So with this kind of strategy right here with the EMAs, one way that I can figure out after it's kind of happened is when these lines flip back under the 26. As I said, that's kind of a static line for me. So as soon as the 6 goes under the 14 and we're moving under the 26 moving average, what we'd be looking for is basically the exact same thing that's happening with the uptrend, except for we're looking to do puts. So instead of the 6-period moving average being on top, we're actually seeing the 14-period moving average being on top. And to me, that's basically signals that we've got a downward trend going on, especially with the 26-period moving average being on top. Exactly the opposite of what was on happening over here. So we would be taking or looking for puts around that 14-period moving average, just as we were before. And if you can get in anywhere over there, that would be great. Anywhere closer to the 26 would be excellent as well. But as I said, the lines are going to move, so you just need to be aware of that. And you can certainly use this with your other strategies and different things you've got going on. This is just to kind of help you and guide you to stay with the trend, because as I said, that's where a lot of traders get into trouble. So as you keep moving along, you can kind of see where price comes back and loves to hit these 14-period moving average and 26-period moving averages, and then seems to bounce back. What you will notice too is when the lines get really, really close together, do not trade this method. It really goes into a range market, especially this time right here. Anytime after about 12 o'clock Eastern Standard Time is really lunchtime, and the volume drops off significantly during those times most often, and you're not going to really have too many great trades, and you could really get messed up in here if you're taking any of these trades. So I would try to stay around about 7 o'clock or before a.m. Eastern Standard Time to about 11, maybe pushing it to 11:30. But after that, I'd kind of back off a lot from it and not trade anymore after that, just due to the drop in volume right there and moving into a range type market for the next couple hours. So anyway, guys, I hope you have enjoyed this video, and this is as I said, really what I'm looking for is this is just a trend guide. If the blue is above the magenta and the 26 is on the bottom, then we'll be looking for an uptrend. And then if you see the exact opposite where the 26 is on the top and then you've got the 14 in the middle and the 6 on the bottom, then we'd be looking for as it being a downtrend, and we'd be looking for puts. So anyway, guys, if you've got any other questions for me or any comments, please leave them below or ask me in the live chat room. I'll be glad to answer those for you. And I will see you in the